Morning traders, and welcome to Price Action GPS. I'm the Market Surfer here at your morning report for Monday, March 26th, 2023. Good morning, everybody. Hope everyone had a wonderful weekend. Over the weekend, not much has happened. I'm sure there's quite a few banks that failed that we'll hear about. There was a lot going on over the weekend. They've definitely they put a lid on a lot of things. So there's a lot of information out there, and now it just seems like the market's getting flooded with all kind of information. So I just let the dust settle rather than try to figure it out. I'm not going to try to compete with them on what do you call it, the sleight of hand. So let them play their games, and I'll just keep watching the charts. So for right now, Bitcoin is topping out. We do have divergence right here. So there's lower momentum with a higher price. We still have a lot of support, whether it's the moving averages or this diagonal blue trend line. One of those should hold. We'll probably take this out, and that may be it. Once we get to this area, then I think we're going to start seeing some. I think the market will turn real fast to the downside over a weekend or overnight, whether it's banks failing or defaults. Something will happen. So Bitcoin, there is a war on crypto. I won't say there's a war on Bitcoin yet, but I personally think Bitcoin will end up being the digital gold, meaning you can store your wealth in Bitcoin, but it's not going to be used for transaction purposes. That's still my theory. I still think stable coins will be that. And I'm a trader, so whatever's going on, in my opinion, I think everything will be tokenized into coins, and you can trade everything from the 2-year to Apple. Apple have their own money. Starbucks has. We can do another, video on that. But the reward system from credit cards, from airlines credit or airlines customer rewards program. They're worth more than the airlines. Look that up. They're worth 5 times worth more than the airlines. Matter of fact, all the money they banked on from COVID, they got because they leveraged out the worth or the actual asset that was their clients. They leveraged that out and got money from the government with the COVID loans. So the idea of money as we know it has changed over the last 30 years. We're just going to be the last ones to know. So Bitcoin, we're topping out. There's going to be a lot of chaos over the next 3 months. I still think we're going to hold off till October. I still think whatever they're doing, they're going to patch it and get through till October. And then October hits, whether it's more war in Europe, banking collapse. But come October, we have bad weather coming, which is always bad, and not much to do. So when it comes to resources and money, I think next winter, we're going to have a problem. I don't think we'll get hyperinflation. Here's the balancing act that we're going to have to try to do. We're going to have to try to balance a strong dollar with inflation. If you weaken the dollar, we're going to get hyperinflation. I still think everyone is bringing their monies home. Every country is going to become nationalistic and have their own resources and their own currency. And then there'll be a world currency, whether it's through the UN or world banking, who knows. We will have, for right now, I still think it's going to be Bitcoin. Bitcoin will be the barometer for everyone's currency because it'll seem like it's neutral. So if everyone believes it's neutral and it's a bad thing or a good thing against the Fed, that everyone will like it, and that's just how the psychology of this works. No different when they passed the Federal Reserve Act. Everyone was for it. They created a straw man argument, and they used the Federal Reserve as the way to save them from the bankers, and it was the bankers' idea. It's just the way the world works, unfortunately. So they're the interesting points that we're going to come up against are those issues. Right now, like if Bitcoin goes to there, then the market will probably rally up to there as well. The other thing we're going to have a problem with, well, we don't have it yet. I think the problems may start coming when these contracts have to flip over or roll over, say June. Do they want to? What I'm saying is they own it from now. They own it now, and they expect it to mature here. But from June to September, or is the September rollover going to be a problem? Which one of these rollovers are going to be a problem? Because if the future doesn't look bright from, say, September on, there's going to be a disconnect when it comes to rolling over these contracts. That could be another point of contention when it comes to the market. So we are at somewhat at highs, but we're peaking out. That's a daily. Go down to 4 hour. Yeah, there's obviously a mess right there. Probably has to find some support because there is divergence there. We're rolling over to the middle, but we're still not under. I don't know if we take that out. Let's see how the day finishes today. It doesn't. It looks like chaos. That's good for traders, but not good for investors. Here's the 2 year. We finally broke that, and we went pretty far. So here's a triple bottom, the retracement to a neutral point, sold off there. Here's this should be our spring, up, down, and we should be heading for this, maybe. I'd say at least close that gap. Then after that, I don't know if they're going to cut rates yet. I don't think they're going to cut rates because they want a strong dollar, going back to that hyperinflation argument. If we weaken the dollar, we have serious inflation issues. We already have inflation issues. But as we shrink the amount of dollars in circulation, does that cause more inflation because there's less money? I know it sounds deflationary, but if everyone's fighting for the money, what's going to take its place? If everyone needs things and there's not enough money to buy it, that creates that 1929 type catastrophe. Because if you listen to Milton Friedman's ideology of the Great Depression was we were on a gold standard. We were selling everybody all over the world everything and getting it in gold and silver. And according to our laws back then, for every ounce of gold we imported, we printed $20 in currency. And they didn't do that. They choked out the money. So there was room for growth, but there was no money for growth. And I believe that was very similar to 1980s when you talk about the Paul Volcker rule. They used the monetary system and the human psychology. Everyone wants dollars and they'll bid it up as high as they want. So the Volcker didn't have to make any rules as far as what the interest rates were. And back then, no one was going to the overnight. That's a 2003 to 2006, in my opinion, steam valve to let some of the pressure off because the banks can't handle what's going on. But look, we've already transitioned through that period. So if you keep thinking banks are going to fail and it's going to be a catastrophe for us, this is already planned. They already have a plan, and I'm sure we'll go through it slowly, step by step. And the banking failures a couple weeks ago, that was it. They took over crypto on the on-ramps, off-ramps. It's about the M2 money supply, and it's shrinking. Now, if they continue to raise rates, people will put money with the government and not in the banks. That will cause a banking collapse, but in a slow fashion, because that's what happened to SVB. You get better returns given the government. For a 2-year bond right now, what are you getting? 3.883%. What are you getting in your bank? Nothing. So, not to mention, if anything's over $250,000, it's not insured. So, they could say they're not making things happen, but they are. It's just the way money works, and they know it. So the flight will be out of the banks and into safe, secure treasuries. Or bonds, corporate bonds, government, whether it's government or corporate debt, people are going to buy other things. They're going to avoid the banks, in my opinion. So we'll see how this works out. It's going to be interesting. 2-year bond looks like, well, we're going to come back up to here to 4%, but it looks like we're at a bottom. We need to find some support before we try to go any higher. This index still hasn't moved since Friday, but this is what I don't like. Anything over here, over that 150 mark, we're in trouble. There's problems. Dollar index, that's an hour. Let me go to 1 week. See, This dollar really looks like it's rolling over to here, but support. Let's go to a daily. Might hold support, but I don't think. Maybe we just take out the 200 period moving average and then come down to the 600 period moving average. I don't see the dollar getting any weaker than that. Once we get down to this level, that's the spring along with the T-bills. I think we're going to fail here. Once we get down to this 116 mark, that's going to be the trigger. So I think we're going to go down from now to October. That will be the catalyst or spring up to here. Pure speculation. That's how I see that playing out. By then, we'll have the 2-year down to about 1.23%. But that will inflate the market. That will make the market run. So if this happens from then to then there's an absolute crash come October. That's the move, the Dixie. That's the dollar. So here's the yen, dollar. Found right there. Nice support. Let's see how this bottom pans out. But I would try to catch that ride. Back up to there. Find some resistance. All right. I'm going to run. Here's another one. This is very important. KBW. It's a NASDAQ Regional Bank Index. See? It's not that I trade these indexes. These indexes give you a peek into what smart money is doing. So back in the beginning of March, end of February, I mean, we were at a point where, yeah, it could take off and go up, but it didn't. It broke, and it's dropping right down to this level. So this probably won't finish until it hits 85.30. Maybe even close this gap down here at $75. But this told you then that this was happening. This is why there was a concern of banking failure with traders because of this and the MOVE index. So there are two things that I watch for volatility and the 2-year treasury. So the 2-year, because that's short-term money, the MOVE index and KRX are the 3 indices that I watch because I think there's a banking issue or a credit issue. So I'm watching the banks, the 2-year note, and the volatility index of the bonds. Right there tells me not everything I need to know, but a good barometer of what the market's doing. All right, I'm going to what I'm trading. Still waiting for HBI to take off. Either it does it this week or it doesn't. So my options expire this week, so that this takes off with some great volume, gets up there, and I make a few dollars, or I lose $13. Let's go Tesla. Still has to fail to get some support down there. Spotify. I have it on the hourly chart, but this is going to fail. 101, you're going to drop about $30. It might be ugly too. What news is coming out? I don't know. Well, look, the news only matters if they want it to matter. PayPal, still the same thing. Waiting for that bottom to get in, set in. Apple, I'd say that's probably the top 164 if we squeeze up to there. And natural gas. Man, talk about a bottom. Probably need some support again before we take off, but this is a weekly. We've already had a nice drop, so we're probably somewhere down there maybe. Let's just wait for it to pan out. Let's go to a daily. Yeah, that's going back to the banking chart we were just looking at, the KRX, and we were talking about in February. See, this is doing the same chart pattern. We're underneath. If it gets up, pushes up against it, finds that resistance, it's probably going to, well, there's a gap there, so that's easy to pick that one. That's probably what we're going to do. 713. All right, everyone. With that being said, it's time to go on to the deep dive. I already did this, but I'm just going to bring it up again because this is from last year, January of 2020, or January 20th of 2022. This company anticipates $84 trillion in wealth transfers through 2045. So when you think about the banking crisis, there is no banking crisis, in my opinion, What they're doing is they're going after this. They're going after the wealth. If you're a cynic and you believe most of the wealth that was created over the last 50 years was crony capitalism, they agree, and they're going to take it all back. And this is how they're going to do it, through taxation and this new transfer that we're going to go through. So this company projects that wealth transfers through 2045 will total 84.4 trillion. 72.6 trillion in assets will be transferred to heirs, while 11.9 trillion will be donated to charities. Greater than $53 trillion will be transferred from households in a baby boom generation, representing 63% of all transfers. Silent generation households and older stand to transfer $15.8 trillion, which will primarily take place over the next decade. 35.8 trillion, and I'm pretty sure they mean that through death and inheritance, because the silent generation are my parents, and my parents have been going for quite a few years. Overall total volume of transfers is expected to come from a high net worth and ultra high net worth households, which together make up 1.5% of all households. As a result, the firm that can remain on the cutting edge of complex planning and wealth structuring tactics will be invaluable to clients as taxation becomes more pressing worry. According to research, grantor trust 77% are far and away the most common way to increase tax efficiency of wealth transfer events among high net worth practices, followed by spousal lifetime assessed trust 54%, strategic gifting 46%. That's pretty smart, actually. As taxes become an increasingly pressing regulatory issue among legislators, wealth managers will need to keep pulse on the latest developments at the state and federal levels, says Joyce Horton, analyst at Cerulli. And I'll just finish with this one. Stakeholders, not shareholders. Stakeholder capitalism. Stakeholders, rather than just the current controllers of wealth, will create a greater sense of responsibility and inclusion among their heirs that will help in the likely case of more complex discussions about management of families' wealth occur in the future, concludes Horton. So I read that one a little screwy because in my mind, there's a million things going on. So basically, they're telling you now what's going on, and this is the letter to tell everyone, hey, they told everyone a year ago what's going to happen. Start making these plans now and get it out of the banks. They're crashing, right? So whoever didn't follow this advice a year ago, they're doing it now. So you can do it the easy way, or you can do it the hard way. So with that in mind, we also have more commercial mortgage-backed securities and the Fed. Is there a crisis brewing in the office? Yes, there is. When was this done? This goes back over a year. November of 20, so not quite a year, 5 months ago. But this is what I was reading in November because I'm worried about the banking crisis, and I thought it was going to happen at the end of the year. But I'll put this in the show notes, but this is very interesting. Gives you good detail of the money, commercial mortgage-backed securities, because I think that's the next one to go. Well, not the next one, it's already started. Higher cost will limit self-storage supply through 2023. So basically, one of the big funds that builds the self-storage, they close their investments. There's no more. They're not taking any more money. Whatever they have. I don't think they're going to grow anymore. They're going to hold off for a few months, or at least for this year. This one is double pinchers of high interest rate and low office vacancies have put landlords in a pinch, as illustrated by Brooks' decision to walk away from $784 million in loans connected to two of the firm's trophy office towers in downtown Los Angeles. Yeah, Los Angeles. I guess they will rebuild that city once everyone's gone. So now the other thing is a little crazy. Don't get me wrong, but Amero Bank, going back to the Amero of 1988, when you talk about the Phoenix. And the cover of The Economist, the Amero. So this is actually a service. It is a Canadian and Czech-based money service business. It redefines banking space through Amero Earn. This is a digital thing. They didn't shut this down, right? Yeah, I didn't think so. look at this. The simplest way to invest your digital assets. This is the Amero. The Amero Bank. You can't make this stuff up. So, and Barney Frank said, was it right about Signature Bank? This was just a ploy to go after crypto. The on-ramps and off-ramps. All right, everyone. With that being said, this is a value for value endeavor. If you're watching this on No Agenda Tube, you can thank Sir Alex by donating to No Agenda Tube. If you're watching this through a modern podcast app or No Agenda Tube, send us a boost. Send us a boostagram and let us know what you're thinking. If you're watching this on YouTube, Rumble, or any other social media, share it, like it, share it with a friend, give us feedback, a thumbs up. I do this. This is not a money-making venture. This is a passion I have. I love trading, and this is for my friends and family who care to follow and watch. We conversate regularly. Whether or not they watch these videos, we'll see. Once again, thank everyone for their support, their courage. Have a wonderful day, and stay safe and effective.